Hi everyone, a massive warm welcome to today's Monday market update. Really big day because we have been waiting for this for a few months now after we closed beneath the 200 weekly moving average for Bitcoin. Why that is so important? Well, it has marked the floor for every single Bitcoin bottom in its cycle history. Now, this cycle is slightly different only because of how negative and aggressive the macro environment is. So Bitcoin hasn't existed, and crypto broadly hasn't existed during a time when we've seen an aggressive tightening from the Fed, so raising interest rates, and also a falling stock market. So those two together are a pretty powerful combination, and it is just applying the pressure onto a risk market like crypto. But we are slowly seeing us grind out of this. And there's an old saying that risk markets climb a wall of worry, and that looks to be what Bitcoin is doing at the moment. But it is a little bit too early to count our chickens. However, the signs are looking really promising. And if you're watching the on-chain data, something we are so big on is looking at the data, you will see that most of the major, larger metrics and indicators are showing that we are at one extreme of the chart. We're at the extreme bottom, and there's only really one way up, and that's up. And we're seeing a lot of those indicators and metrics tick from the bottom and start to reverse. So that is a super positive sign. Also, everyone just seems totally caught up and has their stomach in knots over the macro situation. And while it is bad, there does come a point where you just get hit with bad, ever aggressive news. And eventually the market just thinks through it, it becomes neutral. And then you look to the future, you become very forward looking. And that's where we're at the moment. And you can see the Fed's in a very difficult position and things are starting to loosen up. I won't go too deep in that. It's something we do cover with our clients in our premium groups, especially our advanced mastermind clients, where we talk about the macro and permutations of what the Federal Reserve are doing, what the future might look like, our forecast and all that. And if you haven't already, please check out our newsletter. We covered 4 simple points that all you have to be looking for right now in this market for crypto to reverse, and how you can be much more confident in your investing. So let's crack straight into the chart. So Bitcoin, I've just gone down onto the daily, then we'll go out to the weekly, but I just wanted to show everyone what a positive trend looks like, what positive price action looks like. Joe is huge on showing you this in your Q&As that you get every single Friday, put into the course and also sent into the groups. But I just wanted to reinforce it because this is what really told us that Bitcoin was ready for a bit of a reversal, to break some resistances above and begin to go on a bit of a run. So what we really want to look for are higher lows and higher highs in confluence with each other, moving beautifully in tandem higher. Generally, you want 2 confirmations of the lower highs and the higher highs. And once you have that, you generally know that the market is in a positive state of mind. So we had all the fear, uncertainty, doubt, uncertainty and doubt around 18,000, 17,000. You know, you see the bear calls come out on Twitter. We're going to 10,000, we're going to 12,000. You really have to start to be skeptical in those situations where you're seeing sentiment in the absolute gutter. And when I say sentiment, you just don't look at, one input in Twitter and go, okay, well, last week's been pretty bad, so it must be the bottom. You have to look at something like the fear and greed index, where you take a strong look at the larger picture over multiple years, see where the concentration of the sentiment is. And if we're in an extreme low band of extreme sentiments, to say to the downside, and you compare it back to previous bear markets, then you know we're pretty close. Just looking at this chart, looking at this positive price action, here's a low here at the bottom of this band, and here's another low here as well, which is slightly higher than this one here. Now, let's just count this through. So we've got the low here, then we have a high. Then we have a low, which is slightly higher than last. That's a higher low. Now, what we want to see is a higher high. What happens next? We had it. Came up all the way here to this resistance level. So this high here is higher than this low. So that's 1, 2, 1. And then now we're looking here as well for this next signal to give us those 2 higher lows in a row. So it would be this one and that one. It came back down, tested this. You can see this trend moving higher. Tested there, got bought up. So that's another higher low. So bang, bang, that's 2. Now, what do we want to see again? We want to see that higher high, just to confirm in our minds that this is that trend. And then it did it. It reached a bit higher this time, and that was that little topping out point. So it's higher than that last high, which is really important for us to see. And now we're pulling back a little bit into let's say a little bit of a descending wedge. It's just starting to form there. But what's important here is we're under this resistance at 24,000. We're trying to break through it at the moment. The longer you grind and test a resistance, the more likely it is that we're going to break it. So this here looks pretty positive. We're above key moving averages. So we got above the 21, we got above the 50. Also the trend on the RSI. So the momentum of the bulls is going high. You can see this is very similar to the price action. It's just represented by one line going higher and higher and higher. The thought here is, though, that we may want to come back and test some of these lower levels if we can't break up here, and that's probably what will happen. I think we really need to focus on Fibonacci retracements in these sort of situations. So if I was looking for an entry point on this move here, you would have drawn your Fibonacci retracement there and seen the price just fall back into these almost cradle zones. So 0.618, these kind of areas. Bitcoin can absolutely get down here. You want to see confluence with something else, and you can see that the 21, that's that blue line, moving down here, you know, have some buy orders set. As long as you're confident that the trend is moving higher, Fibonacci retracements are incredibly useful to use. And that's basically all I wanted to show you on the daily time frame. The only other thing I might just remind everyone is, as we're sitting above 23,000, that was our level where the market really wanted to get above, because it marked the 200 weekly moving average. I'll show you that in a sec, but also the realized price level. So above about 22,800 and 23,000 was the average cost basis for Bitcoin investors for when they bought in. So most investors were actually underwater beneath that point. Traditionally, that level historically has provided a tremendous point of resistance for Bitcoin. Once it gets above it, it never goes below it again. And generally it goes below it in a bear market capitulation, which it did. And now it's climbed its way out. Historically, it's never gone back below. So for me, that's a really strong data point. It's also, again, historically one of the best times to dollar cost average into this market. So just buy slowly, automated buys every now and then. Okay, and just popping out to the weekly, this is the really important chart that when you get into these bear market modes, you really don't want to be looking at anything really lower than the daily, going to the 4 hour, all that. You can see some shorter term trends, sure. But if you are a longer term investor and you just want to look at the most important things on a chart possible, just to make better decisions, go to the weekly and look at these longer term moving averages. Now, just again, I'll just reiterate that we want to go back and just have a quick look. Back in COVID, it was used as that floor. It hit right through it and then it rallied above it. But this here has long been a floor in bear markets. You can see here in 2018, in that bear market here, capitulated right down onto the 200 weekly moving average, ground sideways, and eventually ground out of the bear market. If we go all the way back to the previous bear market before that, see here, price just ground through it, and then released higher. And the line only goes so far because before that, there wasn't 200 weekly candles that it could form an average. But historically, it has proven to be a very good area when it is either on it, just underneath it, you know, or above it. So just we need to keep that super clear in our mind that the 200 has long been that gauge of this phase of the market. Now, what's fantastic is here for maybe midterm Bitcoin bulls, and even in the short term, is that we have now closed above it. So this candle here closed above the red line, the body of the candle's above it. We've opened above it. This is fantastic. Now, you shouldn't expect in this situation that we're just going to have a blitzing rally higher, but rather it's what this signals for the phase of the market and what's happening in the longer term. So this is such a good point to be. Investing here is, you can do so with so much more confidence than investing underneath. There is so much more risk investing in this area underneath, even though you think the risk reward is much higher, and I would agree with that. Being underneath is still a risk that we could go lower because we're beneath this incredibly strong historical longer term moving average. But if you're above it, but you're still in the same region, you have that knowledge underneath that you likely have a really strong floor supporting you. So now the only way is up as we move into the new phase of the market. So just keep that in mind. What we really want to see now is follow through. We want to see the weekly candle really blitz through 24,000, 26,000, and then we begin to head up to this just supreme resistance at 28,000. We have a big gap here on the right-hand side, so there's a lot of oxygen that can just be sucked up, and the price should move really quickly. So just keep that in mind. We also have here the RSI trend, which is trying to break through this trend line. I'll just get rid of that line there. Break through here, and then we have a multi-year trend that's developing that we can really exploit to go higher. So that's what I'll leave there with Bitcoin. We're just waiting for what happens next. Hopefully the market opens well here, and equities look like they have followed through and done quite well in the US. But again, Bitcoin should lead those markets. So this is where you want to be looking. Okay, just quickly, Ethereum is still leading altcoins. In fact, it has over this last week. It even led Bitcoin. So there was a lot of love, a lot of capital moving into Ethereum over the last few weeks, which gave the market a bit of confidence, gave us that jolt in the arm, telling us, all right, well, maybe we are seeing a bit of a broad rally here. And it still is a bear market rally. We are in a bear market rally. Ethereum, Bitcoin, all in a bear market. There's some signals high, which we'll get into in a future date, which will tell us that we're out of the bear market and whatnot. But that, just don't have that in your head just yet. That is just way too premature. Ethereum looks quite nice here. It's just consolidating under this huge support at around about 1,700. Look, in the short term, I think Ethereum can absolutely get above 2,000. It looks like that's what it wants to do. As long as Bitcoin is showing that stability above the 200 weekly moving average, I think Ethereum goes higher, and it has been leading as well. Everything on this chart looks fine to me. Just do want to get above this resistance sooner rather than later, flip it as support, and after that, should be off to the races in the short term. Just looking at the RSI, momentum just curling away for bulls, so just keep that in mind. That could be due for a larger correction back to this 21, around about 1,500. A dynamic that is looking a little bit different for me, that I didn't quite expect at this phase of the market, is Bitcoin dominance breaking down. So normally in bear markets, Bitcoin dominance will just grow and grow and grow, and altcoins will just get left in the dust. I guess we're at that point where most altcoins are down 90%, so they're going to see a substantial rally at some point, and it looks like we're there. But if we're not, this can and often has been a signal where Bitcoin is due for another drop lower if altcoins are running without Bitcoin actually running. So yeah, some things are just a bit weird with this chart, but you know, that's okay. Something else is happening. It definitely looks like Bitcoin is breaking down in terms of capital dominance. So a lot of the capital is flowing out into altcoins at the moment, and this looks like it wants to come back down here and retest some lows on the dominance chart. You know, there's some people that don't like the dominance chart. I still think it is useful, just for what it tells us in terms of where the capital is. All right, NASDAQ, just quickly touching on this. Looks really nice, but on the weekly, it is running right up against the 21-week moving average. Now, for the NASDAQ, the S&P, all that, for the NASDAQ, let's just focus on that to be, you know, for a full frontal reversal into bear market rally, and they can be really, really big. You really want to get above this 21 moving average on the weekly, and then she's off. But so far, so good. But we just want to make sure we're not seeing a repeat of what we had, what we saw up here, where we had a nice rally after a big fall, and we came up here, retested the 21 and the 50, and then we fall off a cliff. So that's exactly what we're trying to do here, 21 and then the 50. Hopefully we don't fall off the cliff there. So just keep that in mind. Overall, the traditional markets are looking very favorable for Bitcoin and crypto to have a sizable rally here. The dollar is falling over, which is great. This chart looks terrible. It looks to be correcting a long way, which is lovely. Also seeing 10-year US yields start to click back as well. That's what we want to see. And the equities are looking stronger. So with all that said, make sure to read our newsletter, because I put 4 data points that you need to look at. I've mentioned a couple there, and I go into detail about what you really want to be looking for. But so far, so good. And just quickly, I want to highlight our VIP Immersion group. So if you come on board with us and become a client, I just want to quickly give you a snapshot of the kind of support that you will be getting over your 2 months with us in that group. And then you move into the graduates group, where other previous clients will help you going forward. We will still be there as well, but in the VIP, we give you one-on-one support for 2 months. I just want to show you the group here. So just quickly, I do macro insights and larger big picture thoughts from the Mastermind group. I drop them in from time to time. I've just mentioned here key dates to look out for. Also, you know, red herring, which is a potential military confrontation between China and the US. Potentially this week, we'll see how that plans out. But you can see here, clients will post their questions into the group, and we will help them. Our team will come in and help them with in-depth questions. And there was one here I just wanted to highlight. So James posted in here 2 charts which he is working on. So as you go through the course, we'll help you with your foundations, and then when you get to, say, the TA section, the technical analysis section, really encourage you to post your charts into the group, and then we will help you and provide critical feedback so you can become better at charting and work out what your entry and exit points are. So he posted 2 charts there, then we went through and gave some pretty in-depth feedback there on his charts about how he could make them better, what we really like about them, and again, how we can make them better to make better decisions. So that's it, guys. I wanted to quickly share with that to you today. If you'd like to come on board and become a client with us, just make sure to message the team. I'll have the link below that you can message us as well. But so far, so good. The market is really heating up. And again, I say it so often, but this is the time in bear markets when you lay the seeds for the next bull market. The amount of comments that come in on our business page about how, crypto's going down at the moment and whatnot, that is the mindset of 99% of retail investors out there. They will only invest in this market when it is in a peak state, roaring to high heavens, just before it's about to reverse. They have no idea how to handle it, when the smart investors are really looking and getting interested and getting really excited at these points in times, because this is where you make the most money in these markets. So if you're interested in joining CCI, make sure to reach out to us and the team, and we'll be glad to have a one-on-one conversation with you. So have a wonderful day, guys. Hope you enjoyed this Monday market update. I'll catch you again on Wednesday for our altcoin Bible. Bye.